Welcome back to the Wall Street Podcast. We are initiating a deep dive into JPMorgan's research report, Pop Mart H Uniqlo X Labubu, to launch in China on 22 Aug now and roll out to the U.S. in early Nov, licensing a new growth driver, what to focus on print day. This was released on August 15th, 2025. It really analyzes Pop Mart's strategic moves, focusing on a significant new brand collaboration and key financial insights ahead of their 1H25 earnings.
Exactly. And the report forecasts Pop Mart's trajectory, really emphasizing licensing as a critical growth accelerant.
Yeah.
It also highlights, specific financial metrics for the upcoming earnings print.
Okay, let's break down the Uniqlo X Labubu UT series launch first. The collection features t-shirts and sweatshirts, 7 designs. It launches in mainland China and Hong Kong on August 22nd. Followed by Japan on August 25th, and then gradually rolling out globally, including the U.S. in early November.
Right.
And the pricing seems quite affordable. For instance, HK $99 for adults in Hong Kong compares to, U.S. $24 in the U.S.
Yes. And this Uniqlo partnership, it adds to Pop Mart's existing cross-industry collaborations. Think Coca-Cola, Lasers.
Sure.
JPMorgan views this licensing as a really important strategy for IP innovation and, crucially, monetizing that IP value. They're even floating the idea of Labubu becoming a Chinese Hello Kitty.
That's quite a comparison.
It is. And if this succeeds, it could generate unmodeled upside, both in earnings and maybe even valuation.
Okay, turning to the 1H25 earnings then. Pop Mart's positive profit alert back on July 16th already signaled something big was coming. They indicated a revenue increase of over 200% year over year to RMB 13.67 billion plus.
Huge numbers.
And PAT profit after tax, an increase of over 350% to RMB 4.5 billion. This implies a net margin improvement to 32%. That's quite a jump in efficiency, right?
It really is. And for the August 19th earnings print itself, we're anticipating maybe 3 key positive surprises.
Okay, what are those?
Well, first, Crybaby potentially becoming the second largest IP. This diversifies revenue away from Labubu's current, say, 30% contribution, reduces concentration risk.
Makes sense.
Second, faster than expected growth in that high-margin overseas business. It contributed 52.6% of revenue in 1H25.
Over half already.
Exactly. And JPMorgan projects it could exceed 60% of group sales by 2026.
Wow.
And third, potentially an uplift in company guidance. Think store openings, new partnerships, signaling more growth ahead.
Beyond these, the report also identifies several other catalysts, doesn't it?
Yes, things like the Labubu and Friends animation series debuting soon. Maybe August or September.
Animation, okay.
The opening of new P.O. Pot jewelry shops. And potential future launches like Labubu 4.0, even interactive AI toys down the line.
So let's dig a bit deeper. What's the core strategic intent behind this big Uniqlo partnership?
Well, it's a calculated move, really. For Pop Mart to expand IP innovation, yes, but also to seriously monetize that brand value. It's about testing that Chinese Hello Kitty potential in the mainstream market.
Right.
A successful launch, as I mentioned, could introduce that unmodeled upside to earnings estimates, maybe even valuation multiples. It's testing the waters for much bigger things.
And beyond the Uniqlo launch, when we look at the upcoming 1H25 earnings report, what financial details are truly paramount? What should investors focus on?
I'd say the focus needs to be on earnings quality, not just the headline numbers.
Quality, okay. How so?
Investors should monitor Crybaby's growth, as we discussed, to see that IP concentration risk reducing, and track the acceleration in that high-margin overseas business. It's just crucial for the overall group sales contribution projections, especially looking towards 2026 and beyond.
So bringing it all together, how do these initiatives, the Uniqlo deal, the animation, the overseas push, how do they underscore Pop Mart's long-term investment thesis?
Fundamentally, they affirm the company's strong IP portfolio and, increasingly, its global expansion capabilities. These are just one-offs. Future catalysts like the animated content and potential AI integration are expected to sustain growth and diversify revenue streams further. It all aligns with that projected 67% overseas sales contribution JPMorgan sees by 2027. It paints a picture of a global diversified IP house.
Now, thinking about the impact on the general public, this Uniqlo collaboration, it really marks a significant shift, doesn't it? It brings Pop Mart's collectible IP squarely into mainstream fashion. Characters like Labubu, previously maybe known mainly by collectors, are now accessible in everyday wear. You'll see them on t-shirts in major retailers globally.
And that expansion from niche collectibles to widely available apparel and also entertainment like the Labubu and Friends animation, it just broadens the IP's reach dramatically.
Hmm.
It helps foster, emotional and social connections for a much larger consumer base, well beyond the traditional art toy enthusiasts.
Right.
The integration of these art toys into global fashion and entertainment suggests a really dynamic future for IP monetization. It's fascinating to watch.
So the final thought then is, what does this widespread brand accessibility, moving from niche to mainstream, actually mean for the future of consumer engagement and brand loyalty across all these diverse product categories? How deep can that connection become?